how is this bubble getting so inflated? Well, beyond the genuine excitement, there are some troubling financial games being played that look eerily similar to the dot-com era's dirty laundry. I'm talking about a practice that's being called circular financing. And here's the simple version of it, how it works. A huge AI company like a chipmaker invests a ton of money into a smaller AI startup. That startup then turns around and uses the exact same money to buy the chipmaker's products. On paper, this makes the chipmaker's revenue and demand look explosive, justifying its crazy stock price, but in reality it's a closed loop. The money is just sloshing between a few companies, creating the illusion of a booming organic market. Concerns about these kinds of interconnected deals are growing among analysts and financial watchdogs. Reports have highlighted this pattern of circular investments involving major players like OpenAI, Nvidia, AMD and Oracle. For example, there have been concerns about Nvidia's venture arm investing in dozens of AI companies that then becomes customers for its expensive GPUs. Now, this isn't always illegal. Sometimes it can be a legitimate way to kickstart a new ecosystem, but it can also dangerously blur the line between real demand and financial engineered hype. It feels like a throwback to the dot-com buzz, where companies would basically fund their own customers' purchase to pump up their revenue numbers. A house of cards that eventually collapsed. Financial watchdogs have drawn parallels between this kind of activity and the excesses of the early 2000s, when a company's soaring revenue depended on its own investments coming back as sales. The foundation is shaky at best. It raises